Let's go ahead and dive straight into it. The first ETF is JEPQ. It is JP Morgan Premium Income ETF. Now they did have a run up all the way to one point to $57, $58, but recently the entire market has been pulling back. So now it did have a pullback all the way to around $50. Right now, currently JEPQ has a dividend yield of 11.64%, which is insane, guys. Let's take a quick look at their holdings. So here we are over on Seeking Alpha, ticker symbol JEPQ. This is their top holdings. They're very heavy inside of technology, which is why their ETF, their portfolio did have they pull back, because the technology sector got hit the hardest during this tariff run. It could be over with, it could not be over it, but it did have a big pullback because it's heavy inside of the technology industry. Now this is their top 10 holdings. They have Microsoft, Apple, Nvidia, Amazon, Google, Broadcom, Netflix. So they're very heavy inside of technology. So when technology take a hit, they take the hit the hardest, but they also recover the fastest. So right now we could be getting JEPQ at some good prices as this dividend stock right here. If we take a look at their dividends, they been increasing their dividends for the last 2 years, and they are a monthly paying dividend stock, and they have a yield of 11.64%, one of the highest yields on this portfolio. So if we take a quick look at their holdings compared to one of the safer ones that I have inside my portfolio, this is JEPQ, heavy inside of technology. Let's take a quick look at SCHD. If we're taking a look at SCHD right here, you guys can see that they're more diverse and they're more inside the consumer defensive and energy, and they have a little bit inside the technology. So SCHD is going to have a lower dividend yield, but they're not going to take the big swings up and down because they don't have that much technology inside of their portfolio. If we come back over to Moomoo, if you guys did want to look at exactly how much they have inside their portfolio, you could click on the fund right here and then click holdings, and it shows you exactly how many shares of each company they have inside their portfolio. So if you guys ever did want to build your own ETFs, you guys could build your own ETF easily and just track one of these companies and not have to pay the extra fees on top of that. So I'm gonna leave a link to Moomoo. You can use all their free tools down in the description. Sign up, deposit $100 just from using that platform for the first time. You could get up to 30 free stocks. The next one on this list is another ETF, PEY, probably one of my favorite ones on this list. But before we dive into it, guys, if you do want to join the Patreon, I'm gonna leave a link to Patreon down in the description, down in the pinned comment section. You can join the Lucid Dreamers. Right now I have 7 pro day traders in there that post their option trades every single day. I got swing traders, printing traders, momentum traders, leap option traders, and I personally sell options, but you got to do the dream team if you want to get access to me teaching you the courses and how to sell options, and you have access to everything like that. But over here I post my technical analysis, and every single time I buy and sell the stocks. So if you guys do want to be a part of a community that want to be financially free, I know you do because you're watching this video, consider joining the Lucid Dreamer Roll. So if we take a look back over here on Moomoo, you guys will see once again we're getting these ETFs on sale. PEY do have a dividend yield of 4.79%. If we look at the fund, you guys can see that they had a 3-year period annualized return of 34%. Of almost is less than 1%, which is not that good. 5 years up 11%, 10 years up 7.9%. So you're really relying heavily on the dividend income from PEY. And we come over here and we type in PEY, you guys can see that they have been performing decently well. We look at that summary over the last 5 years, they're up 38%, which is pretty good for me. So we could be getting them at a discount right now because year to date they're down 9%. So we could be picking up PEY. I like PEY under $20. Whenever I see PEY under $20, right now it's at $19.34, I like to go in and pick up a couple of shares. If we take a look at their holdings, they have 52 different companies inside of their portfolio, and they have one of my favorite ones in here that I don't directly invest into, but it gives me access to them. It's the Altria Group. So I could invest inside PEY because they have Altria Group in there. I don't directly invest inside of Altria Group, ticker symbol MO, because they're a cigarette company and cigarettes have given too many people in my life cancer. So I don't directly invest inside of ticker symbol MO. If I invest inside an ETF that invests into them, cool, but I'm not going to invest into them directly and be an investor inside that company. But their breakdowns is a lot different. 26% of their portfolio is inside of utilities. 21% is in financials, and then 16% inside is inside consumer defensive. And we'll take a look at their dividends. Take a look at their dividend, guys. They have a dividend yield of 4.79%, and they also pay out theirs monthly. The next one I'm going to show you guys is the monthly paying dividend stock. I know I added to the list a lot, but I absolutely have to talk about it because this is some of you guys' first time watching these videos, and that is Realty Income, ticker symbol O. This is a real estate REIT. By law, they have to pay out 90% of their taxable income back in the form of dividends to their investors, which is why their dividends is so high. And this company has been performing well for the last 25 years, making them dividend aristocrats. They're inside the S&P 500, and they increase their dividends every single year for the last 25 years. Most of the companies on this list only been increasing it for 1, maybe 2, maybe 3, maybe 4 years. This one has been increasing their dividends every single year for the last 25 years. If we take a look at the company, you guys can see that Morningstar Research is giving it a fair value of $75. And let's look at the target price. The target price right here is giving it a high of $65, a median price of $60, and a low price of $59. So right now it's currently at $55, and the low price that the analyst is giving it is at $59. If we take a look at the valuation, you guys can see that is below the grayed out zone. Whenever it's below the grayed out zone, that means you're getting it at a pretty good value. Just a little while ago right here where you see the spike, you're overpaying for it, but right now that's below the grayed out zone or the blue zone, you're getting it at a good value. Now, ticker symbol O, they rent out to your favorite companies. They rent out to Walmart, Chipotle, 7-Eleven. They rent out to your favorite companies, and these are companies that's not going to wear anytime soon. So they're putting good tenants inside of their properties that create consistent income, and that's how they're able to increase their dividends every single year for the last 25 years. All right, so here we are on ticker symbol O. We can look at their dividend history. You guys can see that it's consistently going up and up. So they had a 26, 27, 27. So the next one's probably be 28. Look like it's been going up by 1 penny every couple of years or so. So they have been increasing their dividends. If we take a look, they have a 5.8% dividend yield, and they pay out their dividends every single year. And they pay out their dividends monthly. And the last one we have on this list is PEYUF, which is a Canadian energy company up in the Deep Basin, and they operate up in Canada, up in Alberta. And investors has been attracted to the stock because they pay a consistent dividend with a strong yield. If we scroll down to their dividend yield, they have a dividend yield of 7.82%. And right now, over the last couple of years, you could have been getting PEYUF at a pretty sweet deal. Over the last year, they're up 8.4%. And over the last 5 years, they're up 800%, which is crazy. But over the long term, as you guys can see this dip right here, they found the way to turn this company around over the last 5 years, which is why they've been growing up 800% over the last 5 years. But over the last year to date, they're up 8.54%. So let's take a look at one of my favorite ones. Okay, so now let's see what one of our potential returns could be with JEPQ, right? Yep, there we go. And let's say we started off with 100 shares. Their dividend yield is 12.67%. What is their growth? Let's see what it would be. That started off at before the tariff crash. It was up to $58, so this was like 16%. Now they're up like 5%. So let's just say that grew 1% every single year. So we're gonna come back over here to the dividend calculator, and your share price growth would just be 1%. They have been growing their dividends, but it's only been out for 3 years. So let's just say they'll grow their dividends like 2%, and we invest for 30 years, and we invest $20 every single day. That's $100 a week. So that's $5,200 a year. So this is us investing $20 inside of JEPQ every single day. Let's see what our account would look like after 30 years. Let's hit calculate dividends. 11.64. Let's fix this. That says 11.64. 11.64. There it goes. And now let's hit calculate dividends. And there we go. Oh, there we go. We'll have a $1.7 million account after 30 years, bringing in $320,000 in dividends. So after year 10, we'll have a $100,000 account, bringing in $11,000 a year. After year 20, we'll be bringing in $56,000 a year with almost a $500,000 account. And then at the beginning of year 30, we'll be bringing in $255,000 in dividends. So that's why JEPQ is near the top of my list, especially now that we could grab JEPQ at a pretty sweet deal. It's on sale. The price has dipped. So if these four on this list, if I had to choose one, it'll be JEPQ, PEYO, and then PEYUF would have to prove itself a little bit longer because that crazy growth over the last 5 years is insane. I doubt they could keep that up, but right now, if you invest $20 a day inside of JEPQ, if you could retire over the next 30 years, bringing in multi 6 figures in dividends just from $20 a day inside of JEPQ. So these are my top 4 monthly paying dividend stocks that would generate you income every single month that will help you pay the bills. So if you made it to the end of this video, let me know which one is your favorite down in the comment section. If you guys do want to join the Patreon, I'm gonna leave a link to Patreon down in the comment section and also down in the description. Can't wait to see you guys in the next video. Other than that, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.